Good evening and welcome back. We had a pretty interesting day in the market today. Most of the major indices were red. But the question is, just because the market is red, does that mean the market is actually in some sort of danger? That's what we're going to break down in this video. We will go through the key market levels, what today's price action is telling us, and what really matters heading into tomorrow and the rest of the week so we can trade better and smarter. So let's get started. Let's talk about the triple Qs first. The first thing that stands out to me is this. Triple Q has had 6 consecutive green weeks. 1, 2, 3, 4, 5, 6. So after a move like this, a red day or even a little bit of sideways price action is not automatically a problem. The real question is this: is this just normal profit taking after a strong move? Or is this start of something more serious? We don't know that yet, but the technicals can give us clues. Now, looking at the daily chart, I want you to pay attention to 2 candles. The first one is on the May 12th, which was last Tuesday, and the second one is from today, Monday, the May 18th. Notice how the lower wicks on both these candles, that tells us the sellers tried to push the price down, but buyers stepped in and pushed it right back up. And this has now happened twice in a short period of time. From a purely technical point of view, that is not bearish yet. Actually, it shows that buyers are still defending important areas. Now, does that mean the market has to go straight back up to all-time highs? No, but it does tell us that the market is not breaking down yet, which is a good news if you're long. And I want to show you an example of something similar from the past. And it happened on Nvidia. So let me just pull that up. Let me just remove this. Yeah. So Nvidia broke Nvidia broke out of $197, which was a previous resistance area. And ever since it broke out of the $197, Nvidia, the sellers tried to push the price down back under 197 on multiple occasions. Look at this wick here. Look at this wick here. Even like most of these wicks have a bit of shadow underneath that. So that 197, that turned from resistance into support. And once the buyers fully defended that area, Nvidia made a strong move to the upside. That sort of price action is what we're seeing in the triple Qs and SPY for that matter, but we'll take a look at SPY later on. But let's just go back to the Qs. I'm not saying Qs is going to go back to all-time highs, but I'm just reading the technicals. The past never guarantees the future, but the behavior is pretty similar. A strong level gets tested. Now, that strong level, in our case, is the $700. Sellers try to push it lower and buyers keep defending it. And that support of $700 continues to hold. The bullish structure remains intact. So, in my opinion, if triple Qs pull a little even below 700, that doesn't automatically destroy the bigger picture. But here's the difference. If Qs stay above 700, this remains a very controlled and healthy pullback. In that case, one strong day could easily put the market right back near all-time highs. But if Qs break below 700 and starts moving toward, let's say, 680, 650, then the market may need more time. That would likely mean a deeper consolidation phase before it can attempt new highs again. So for the most bullish scenario, I want to see triple Qs continue holding above 700. And there's another reason that level matters. When I draw Fibonacci from that gap up day to the highs on the Qs, you will notice that $700 is sitting right at the 23% Fibonacci retracement line, which from Fibonacci aspect is the most shallowest pullback and most bullish type of pullback. So as long as the price holds above that zone, this is still a very manageable pullback. There is no major reason to panic. Now, when we move down to the hourly chart, the picture is slightly different. On the hourly, triple Q is in a short downtrend. So before we can say the market is ready to push back towards all-time high, we need to see the hourly downtrend break first. Right there. That's the first confirmation I would want to see. Until that happens, we have to respect the short-term weakness. So the way I'm looking at it is very simple. Daily chart still looks constructive. The 700 level is the key area. Hourly chart is in a downtrend, and if hourly downtrend breaks while triple Qs continue holding 700, then the buyers probably regain control and the price starts moving to the upside very quickly. But if 700 breaks cleanly and sellers start building momentum, then we may be looking at a longer consolidation period. So going into tomorrow, I'm not treating this as a red day, as panic. I'm treating it as a test. The market had 6 strong weeks. Now we're seeing whether buyers are still willing to defend that key area. And right now, the level that matters most for triple Q is $700. Above that, the bullish structure is still intact. And below that, we slow down and let the market prove itself again. Now let's go to the SPY. SPY is interesting as well because we're seeing the same kind of behavior that we just talked about on the triple Qs. On Tuesday, the buyers stepped in again. And the Tuesday buyers stepped in, and then today they stepped in again. So even though the market was red, we're still holding some very important levels. When you look at the daily chart, the structure still looks absolutely fine. SPY is still in an uptrend. And the key tell for me is these longer wicks. Sellers tried to push the price down, but buyers stepped in and pushed it back up. That has now happened twice in the last 2 weeks. So from a technical point of view, this is not a broken chart. This is buyers defending the trend. The level I'm watching very closely on SPY is 734. The level is getting tested right now, but 734 is holding intact. Now, it does not need to go straight up from here. It can consolidate above 734. That's totally fine. That would actually be totally fine because after a strong move, sideways price action can be healthy. It gives the market time to reset without breaking structure. But here's why 730 matters so much. If SPY keeps holding above that level and then starts pushing back up to, let's say, 741, 744 area, that would be a very bullish signal. That would tell us the buyers are not only defending support, but they are starting to regain control as well. And if that happens, then SPY can move back towards the 750 all-time high very quickly. So right now, I'm not looking at this candle and saying the market is in trouble. I am looking at it and saying so far, this is still a controlled pullback. Now, of course, if SPY starts losing 734, then the conversation changes a little bit. That does not mean SPY instantly becomes bearish. It just means the pullback is getting deeper. And if we zoom out to the weekly chart, SPY could technically pull back towards 720 area or even somewhere around 710 and still be forming a higher low with a bigger bullish trend. So the bigger picture will still be okay, but the most bullish scenario would no longer be as clean. That's the difference. Above 134, this is a shallow pullback. Below 734, we may be entering a deeper consolidation phase. And when I draw the Fibonacci here, Fibonacci also, the 23% also lines up with 734 level that we have just talked about. This is why going into tomorrow and the rest of the week, I am leaning bullish on both SPY and Q. But for SPY, since we're talking right now, it has to stay above 734. And if price pulls back into, let's say, support and buyers step in again, those dips are very buyable. Thesis only changes if SPY loses 734. So plan is simple. Watch 734 for any downside. Watch 741 for upside. So let's talk about some individual stocks I'm watching for potential day trades and swing trades. And the very first name is MU. MU has had an absolutely amazing run so far. And the thing about MU is simple. When it starts moving, whether it's to the upside or to the downside, it moves very fast. That's why I love trading it. The opportunity can be very good, but the risk is also very real. If you don't manage your risk properly, MU can punish you quickly. But when it moves clean. And right now, MU is on my close watch for a potential dip buy. Now remember, my dip buy thesis only applies as long as the overall market structure is still intact. If the market structure changes, then my thesis changes with it. So with MU, the level I'm watching very closely is 683. When we go to the hourly chart, this level becomes very obvious. MU had this accumulation zone, the 628 to 683. And once it broke out of that zone, look at this strong breakout candle. And when a stock breaks out that aggressively, it usually means the price moved so fast that not every order had a chance to get filled. A lot of times, what happens after that is the stock eventually comes back to retest the breakout area. And that's exactly what MU is doing right now. It has come back to test the 683 area. So for me, this is very simple. If MU can show that it can hold 683, this becomes one of my top long setups. I would probably start this as a day trade first, but if the market supports it and the setups continues to hold, this could turn into a swing trade. That is why MU is my number one watch right now. If it holds that level and buyers steps in, I am absolutely watching for a long. The second name I'm watching very closely is Apple. Apple tried to break the $300 level last week, but the overall market wasn't fully supporting it. There was selling pressure in the broader market, and when the market is under pressure, individual names usually feel it too. But here's what stands out for me. Apple has still shown a lot of relative strength compared to the overall markets. So if the market starts showing more momentum again, Apple becomes very, very interesting. The key level for me is 295. As long as Apple is trading above 295, it stays on my top watch list. And the move I'm watching for is the break of the $300 level. If Apple can break 300 with strength, then we could see continuation beyond that level. So Apple is not a trade I want to force early, but if the market firms up and Apple keeps holding above 295, then the 300 breakout becomes very important. The next name I'm watching very closely is Microsoft. When we look at the weekly chart on Microsoft, Microsoft is forming a really nice bull flag here. This is what makes this setup most interesting. The stock has also been showing relative strength compared to the broader market. So Microsoft, because so it is showing a lot of strength, because if the market starts ripping again, we want to know which names already look strong, and Microsoft is one of them. The level that I'm watching very closely is $420. And remember, we have been talking about this level for many weeks now. Right now, Microsoft is trading above that level, which is constructive, which is great. But the real breakout level that we need to watch out for is 427, which that level has acted as a key resistance on Microsoft. If Microsoft can break above 427 and hold that breakout, then I think it has room to move towards $440. That would be my first target area if I'm when it starts moving. Another thing I like about Microsoft is the descending trend line that it has broken out of. Ever since Microsoft broke out of that descending trend line, it has been trading around that trend line for many, many days now. And not only it's trading around that trend line, which is a very positive and healthy sign, it also broke above the $413, which was a previous breakout area on Microsoft. So the 413 area has shown a lot of buyers are stepping in. So as long as it stays above 413, the bullish structure is still alive. If it breaks above 427 with strength, then I think the 440 becomes very realistic. That's why Microsoft is one of my top swing watches. The next name I'm watching is Oracle. This is also more of a swing trade. And what's interesting here is the rotation we have been seeing. Lately, some money has been shifting out of semiconductors and back into software names. And remember, software names were struggling for longest time, but now software names are starting to have life come back to them. So Oracle is one of those examples, along with Microsoft. And similar to Microsoft, Oracle also broke above a descending trend line. And after breaking out, it has now come back to retest that trend line, which is a very healthy sign. The key level I'm watching on Oracle is $184. As long as Oracle is trading above 184, the breakout thesis is still intact. That means any pullback into that area can become a buyable dip opportunity. Even if Oracle comes down a little bit more, the bullish narrative can still remain alive as long as it holds the bigger support zone. So for me, Oracle is a top watch for a possible swing trade. The upside area I'm watching are 192 first, and then possibly a $200 if the market supports the move. But again, the market has to support the trade. I don't want to take a swing trade in an individual name if the broader market starts breaking down. So those are all the names that I'm very closely watching heading to tomorrow and rest of the week. Some of them are mostly for day trade, some of them are for swing trade. So I hope you liked the information I've shared with you. If you did, please consider subscribing. I love breaking down these individual names and overall market every single day at the end of market close. And if you want to see more of this, then please subscribe, and I'll see you in the next one. Take care for now.